Hi.
Hey, how you
Hi.
doing?
Good. How are you, Mike?
I'm
Hey,
doing
everybody.
well.
I guess we're starting now. I can't quite tell if we're live. I think we are. I'm David Slade. I'm a Post and Courier reporter and personal finance columnist. I started writing a weekly column during the Great Recession aimed at helping people save money and spend it wisely. And since then, I've written about 500, well, more than 500 columns on subjects ranging from little known tax breaks to grocery store shopping strategies. And I'm joined today by Mike Kreft. He's a financial advisor and president of Palmetto Coast Wealth Management. And we're going to talk about financial advice and answer questions. Mike's specialty is helping people preserve, grow, and manage their savings. And he's developed a series of online videos, and we'll be giving free access to some of them to today's guests. Say hi, Mike.
Hey, how you doing? Thanks for having me, David.
Good. Do you want to tell everybody a little bit about yourself?
Yeah, first of all, I actually want to tell you that for the viewers here, that David, you and I met. I mean, it's probably been more than 11 years ago. I think you had just
Oh, yeah.
started column, right? I'm constantly reading things to keep up with what's going on, and your column has been a great resource, not just for me, but for my clients. And I wanted to tell everybody this because I mentioned that I was doing this to one of my clients the other day, and she sent me this email and said, congratulations, I've learned all sorts of things from David's column. The Safe Homes Project that saved me thousands of dollars on my roof replacements, programs that help defray costs on updating home insurance, etc. So it's really been beneficial to a lot of my clients, your column, and so I just wanted to throw that out there.
Wow. Well,
Yeah.
thanks. I always love hearing from people and, who say, wow, you helped me save money. That's the whole idea. I mean, I've been a newspaper reporter for more than 30 years, and that's not a high paying job. So I've learned a lot about saving money, and I try to share that. And one week I might write about state tax incentives, and the next week I might write about grocery store coupons. I mean, I know that sounds silly, but I mean, Wednesday's paper saved me $20 right there. Um, but I know that's just minor stuff. My
Well, no,
big message is
it
that,
saved me a lot of money personally too. I want to mention that. I don't want to, I know
oh
you
yeah,
have myself, but I will say that I took advantage of that Safe Homes program. My wife actually saw your column in the paper and said, "Hey, we need to jump on this," and we did, and we saved a bunch of money from
that's
doing it.
awesome. Yeah, we need to talk about safe home a little bit later. I think we've got a question related to that. The I guess my big takeaway is that helping people understand that lots of small savings add up, and eventually you get some financial security and maybe a better lifestyle. And for young people in particular, the goal is to get to a point where you're putting some money aside each month for savings, for retirement, for investing. I mean, I know, Mike, you and I cover different ends of the financial advice spectrum. You're unlikely to be talking to people about grocery coupons, and I'm unlikely to talk to people about estate taxes. But there's a lot of overlap in what we do and things that can help people financially, whether they're young tech workers or retirees on fixed income. And there's a question we got early on from a participant that kind of is a great example of that. Bobby asked us, where is a senior to put money now that gives some return as a hedge against inflation, but has some safety as well? And I know Mike and I are both pretty excited about I bonds. Mike, do you want to talk about that a little bit?
Yeah, people, a lot of questions. I think inflation, I think President Biden said, is like the number one concern people have right now. And it hit like 8.5% in March, the highest in 40 years. So I think a lot of people have that same question. What do we do about dealing with inflation? And we got to make sure we're using the proper tools. I hear a lot of advice out there about ways to hedge inflation that I think is a little bit off. And series I bonds are one thing that I think could be a really great opportunity to hedge inflation. They're basically US government bonds, they're savings bonds that earn a fixed interest rate combined with a variable rate that gives you some return plus inflation protection. And it's considered one of the safest investments, one of the safest places you can put money in. And back in November, the US Treasury announced that newly issued I bonds would be paying 7.12%. So that means people who bought an I bond back in November, and I wrote a blog about it, sent it out to all my clients, and many of them jumped on it. They were earning 7.12%, through April when the new rates were announced. And now I think the new rates, David, are going to be what, 9.5%?
More than 9 for sure. Yeah. And
Yeah.
and you're right. I mean, the big takeaway is, I mean, these are federal government bonds. I mean, there's no middlemen, there's no fees related to buying them. They're totally safe. And I mean, banks are paying people a fraction of a percent of interest, but you can go buy an I bond and it's paying as of May 1st 9 plus something percent. And I think what people need to know is, we've talked about this before, because I know you and I both put some of our emergency savings in I bonds when we found out about this. Is basically you have to buy them online at treasurydirect.gov,
Right.
and there's a maximum of $10,000 per person and a minimum of 25. And what people really need to know is that if you buy an I bond, even though it's technically a 30-year bond, you can't cash it in until you've had it for 1 year.
Mm-hmm.
And if you cash it in that soon, you have to forfeit the last 3 months of interest. But you still get a heck of a lot more than you would, in a savings account. And then after you own it for 5 years, you can cash it out and keep all the interest. Right, Mike?
That's right. Yeah. I mean, you can't beat it right now. It's a great thing. I know you just wrote a column about it on Sunday, right?
That's right. Yeah.
Yeah. So people should check that out if they want to get more information about that. Good.
Yeah.
Good.
And let me say, we're going to be, there's going to be a follow-up email after this event, and I'm trying to send a lot of links to our coordinator. I thought we'd be able to post the links in the chat, but apparently not. So those will be, I'm told, emailed out later, including the information about Mike's online financial course. Mike, another question we got from a participant kind of goes right to one of my big themes on personal finance. Mary Ann asked, do you have any advice about how to manage the escalating housing costs within a budget? And, lots of people are struggling with expensive housing and soaring rent right now. And I don't know how to make housing less expensive, but what I would say is that people need to focus on all the different ways they can save money, because it's all kind of going into the same pot. I mean, if you're figure out how to pay less for streaming services or cut the amount of money you're spending at the grocery store, that's not going to reduce your housing costs, but it'll help you pay for it. What do you think, Mike?
Yeah, I agree with that. And one thing that I commonly see is people are seeking to reduce costs, which makes a lot of sense, but they often don't have a good handle on where their expenses are going every month. And
right.
You might create a budget, and that budget might or might not be very realistic, but they don't track their expenses to look back and see where that goes every month. So my advice would be to use your bank or software or something that you can go every couple weeks and track your expenses and see exactly where it's going. Make it a habit too. I mean, do it at the same time every couple weeks, maybe with your morning coffee or in the evening or whatever. But just seeing where your money's going and being mindful can oftentimes help you manage those costs better.
Yeah, I mean, that's good advice. I mean, just like small savings can add up, small expenses can add up. And I mean, we're both old enough to remember when everybody didn't have all these recurring monthly bills, whether it's your cell phone, your streaming services, all these things that didn't even used to exist. And now they just $10 here, $15 here. Next thing you know, you're paying $150 a month, to watch television. Yeah, people need to.
A lot of times it's going out to eat. It's little things like going out to eat or
right.
Buying cups of coffee or whatnot, that you might just, even if you cut back on that stuff, when you're more mindful about it, it can make a difference.
Right. Because I don't think people need to, deprive themselves or really hurt their lifestyle in order to save money. But you're right. They need to know where the money's going and how to get the most for the money.
Mm-hmm.
But for homeowners, renters, there aren't really so many things I guess I have to say to be helpful. Homeowners, there are lots of different tax breaks and things that people I've found often don't know about. Like one I think you and I talked about years ago is the excess insurance premium credit in South Carolina. It's got a long name, but it's basically a state tax credit for homeowners who pay more than 5% of their income to insure their homes. And it's Doesn't matter how much money you make, doesn't matter where you live. If your home insurance is more than 5% of your income, you get a tax break that's worth up to $1,250 a year. And that's basically free money, but a lot of people I found didn't know about that. And just this month, I got an email from a reader who remembered to sign up for South Carolina's homestead exemption because she had clipped and saved a column I wrote years ago. And then she turned 65, which is when you can do it. And she signed up, and right there, that knocks off $50,000 of your home's taxable value, which is, again, real money. But if you don't know that you need to do that when you turn 65, you don't get the savings. Do you hear a lot about this sort of thing from your clients, Mike?
Well, I hear questions about it, and oftentimes I don't hear questions about it, and that's concerning because they don't know about it. And I think knowledge is obviously a very important thing, and so that's why I think it's good that people read your column and become aware of it. Especially, I think a lot of times the financial decisions people make are based on misconceptions or just a lack of knowledge.
Yeah, and you mentioned the Safe Home program early on, and I'll tell you a quick story about that. I mean, this is a state program for people in hurricane-prone counties. Basically involves tax breaks for people who make their homes stronger. And when I first wrote about it, it seemed like hardly anybody knew about it. The state had money left over every year. They don't anymore. Unfortunately, now when they open up for applications, they tend to be gone in hours.
Yeah, it's because you're.
Yeah, but you and I were both lucky enough to get Safe Home grants before the frenzy. And I mean, basically the state will subsidize putting a strong hurricane resistant roof on your house and then give you an income tax credit on top of that, right?
Mm-hmm.
I almost don't write about it anymore because people will just be frustrated because they go try to sign up and 4 hours later the state's committed all the money. But that's something people can find on the State Department of Insurance's website because they're in charge of that.
I think you can sign up for the list where they'll notify you when it becomes available again.
That's a good point. Yeah. Thanks, Mike. Yeah, people can go sign up to be notified, and if they're lucky, maybe like you and I, they'll get a Safe Home grant and save thousands of dollars.
Yeah.
Hey, why don't we take another question? I've got one here from Carrie, who asked, is South Carolina a state that has lower tax rates for Social Security and pension accounts? Mike, I'll throw that one over to you.
Yeah, good question. When we're planning for retirement, I think a lot of times people forget how big of an impact taxes can have. So I think that's a great question and good that you're thinking about it. Yeah, South Carolina is actually a really good state to retire in. Social Security benefits are not taxed at the state level, and other retirement income from IRA distributions, pensions, that kind of thing, while it is subject to state income taxes, if you're 65 or older, you automatically get a $15,000 state income tax deduction, and that's doubled if you're married filing jointly.
Right. I mean, and that's a pretty big deal. I mean, so if you're a married couple, the state's not going to tax your Social Security benefits. Mm-hmm. And then on top of that, your first $30,000 of retirement income is not taxed by the state as well, right?
Yeah, that's right. That's right. And keep in mind, though, that's 65 or older. A lot of people, one thing I've seen is people retire early, like 62 or something, and they're surprised that they're paying income taxes on those distributions or their pension.
Yeah, that's a good point. You made me think of this too. We were talking about I-bonds before, and the one thing we didn't mention is the interest is not subject to state income taxes.
Right.
So on top of getting that, 7 or 9 or whatever percent it is when they readjust it every 6 months, the federal government will tax that, but not the state.
Right.
Now, Mike, you've been putting together some online courses about some of about personal finance subjects, and I know you were going to tell people how to access some of them for free. But you want to talk about some of your favorite tips and takeaways that have kind of stuck in your mind as you develop these?
I just tried dropping that in the chat. I don't know what. Oh, I think. Let me see if I can. I know you said we couldn't do it, but
I'm not sure. I think if you change it over to the chat for everyone, maybe maybe people will be able to see that.
Yeah, there. I think you should see that now. Basically, yeah, I used to be a school teacher. That's one thing I didn't mention. And so I'm kind of a teacher at heart. And I take that approach with financial planning too. And I think now having some knowledge, this is where you and I share a similar philosophy, David, is really having some basic knowledge is really the key to making good financial decisions. And I just see people making a lot of mistakes when it comes to things like investing and when to take Social Security. And so I decided that what I would do is I'd put together a course that would consist of 8 modules per, I guess, and they would be on different topics to educate people on these things. And so I've got 3 of them done now. And as a thank you for attending, I'm giving you access to those 3 courses for free until May 22nd. Check them out. There's one on investing, one on Social Security timing. If you're getting near that age where you're trying to decide when to take Social Security, check that one out. And then taxes and retirement.
Yeah, Social Security timing is one that I'll be interested to see what you have to say about it, because I don't think people have any idea just how many different options there are for claiming Social Security, especially if they're married. And then you've got 2 people and they could claim it at different times. You could take the marital benefit. I mean, I'll look forward to seeing what you've come up with, because that's not one I've been willing to tackle.
Well, I'll just mention this. You know, I hear people say, and this is common, I'm sure a lot of people on here can relate to this, I'm taking Social Security as soon as I can because it probably won't be there. Check this video series out, because again, there are a lot of misconceptions, a lot of considerations when it comes to when to take benefits, that if you're married especially, it won't only affect you, but it could significantly affect your spouse.
Absolutely. You know, and I want to follow up on something you just said about Social Security not being there, because I know what you're talking about, but like a lot of the things in our tax code, I feel like Social Security is one of those things people don't understand about as much as they should. I mean, just going from the emails I get if I write about it, you know, people say, oh, it's a Ponzi scheme, oh, it's going bankrupt. And I think what people need to, you know, make sure they know is, I mean, Social Security, it's not like the government takes money and sits it aside in a little box for you. It's not funded by income taxes. It's I mean, the payroll taxes that come out of my check every 2 weeks are helping pay the benefits for my mom and my dad. And what's happened is there are now so many retirees that, you know, Social Security once had sort of a fund of money that was set aside, but it's gone now.
Right.
And right about the time I'm 65, of course, is when they won't have enough money to pay full benefits from what's coming in from payroll taxes. But they're not going to run out of money. I mean, they're going to come in, the taxes keep coming in, and as long as those payroll taxes keep coming in, Social Security benefits keep going out. The question is, what do you do when the tax coming in is only enough to pay 75% of the benefits that have been promised? That's, again, supposed to happen the year I turned 65, I think, or 67, I forget which. So yeah, to your point, it might be reduced. It's not going to go away, but it might be reduced. So there's a question that goes into the whole timing about, yeah, do you want to take the benefits they're able to pay fully earlier and then wait and see what happens, or at some point? Yeah.
And David, to that point though, I don't know, in most cases, what you just said, it's not going to necessarily, and it shouldn't affect your decision as to when you're going to take it. I think it needs to be built into the plan. If you're, let's say, in your 40s or 50s or whatnot, that perhaps it could be reduced up to 24%, because if they did nothing to fix it,
right,
the scenario as of right now, it's going to be reduced about 24%. So building that into a plan, if you're younger, maybe a good idea. But I don't think people who are nearing Social Security right now, that necessarily should affect your decision about when to draw benefits or not. Now, I will say, talk about saving money. This one single decision could literally save you tens of thousands of dollars, if not hundreds of thousands of dollars over your lifetime. So it's something you really want to get it right.
Right. I know a lot of people have made decisions they came to regret later once they knew more about Social Security and what their options would have been.
Yeah, or
because
they don't
once you make,
never know that they made the wrong decision.
Because you can't really, I don't think you can really change your mind later, right?
There's yes, that's correct. You used to be able to
Mhm.
pay it back, like if you took it early and then, and whatnot. But now you have, I think, 12 months to correct any mistake. After that, you're kind of stuck.
Right, right. Well, every time we talk about retirement, I'm always reminded. I think I told you about this when we chatted before. I go to public events sometimes, and the Rotary clubs and whatnot, um, and sometimes it tends to be an older audience. And one thing I've found that always resonates with people who are that age is just how important it is to, if you're married particularly, to communicate with your spouse or your partner, so that if you were to suddenly die or get hit by a bus, have a heart attack, whatever, they know where all the financial things are. They know how the bills get paid, where's the money. I think in a column I called it a kick the bucket list, because every time I brought this up, inevitably there are two, three, four people in the audience who will stand up and talk about what a horrible time they had after their spouse died, and they just didn't know any of these things. It's not really a financial planning thing, but it kind of is.
Yeah, no, it is for sure.
Yeah,
I think it absolutely is a financial planning thing, and I've seen that too, where people lose a spouse that handled everything, and they're used to that, and the spouse did a great job for years handling everything, but the surviving spouse didn't really have a good handle on even where to find important things like insurance documents. So there's some tools that are available that you can use to upload documents safely in a vault, or even if you keep them someplace safe, like a safe deposit box. But just keep in mind, a safe deposit box isn't necessarily the best place to keep some things.
hmm right. Mike, I see we've got a question in the live chat, and I'm going to throw this one to you.
Mhm.
It's from Lisa, and she says, if you're over 55, should you consider converting a traditional IRA into a Roth IRA, a little at a time or all at once when the market goes down? That's
Awesome. Yeah.
that's outside of my comfort zone. So what do you think, Mike?
That's a great question. I think most people should be at least considering some Roth conversions. So that is an excellent question. Whether you convert it all at once or over time, for most people, I think it should be over time, because what you don't want to do, what you have to remember is that whatever amount you convert, you're going to pay ordinary income tax on. And so depending on how large your IRA is that you're planning to convert, it oftentimes does not make sense to do it all at once. It makes sense to spread it out and maybe have some sort of a plan. If you work with an accountant, set up a plan with your accountant where you're going to convert enough each year to keep you below the threshold where you're going to end up paying more tax than you need to. But that's a good question, because see, what a lot of people forget, I think, is IRAs, 401ks are great during your working years, but you're kicking the can down the road in some respects, because once you turn 72, you're going to be forced to take distributions from accounts like IRAs, 401ks, and pay taxes. And if you've done a good job saving, you may end up having to take more out than what you need to, which means you'll pay more taxes than you need to. So most people should be considering some Roth conversions before they turn 72.
Yeah, and that's another one of those where the strategies and the advice really kind of depends on where you're sitting financially, because on some level, having to worry about taking more money than you need out of your retirement account is a problem a lot of people wish they had.
Right. Right.
um, but you were talking about Roth IRAs, and that brings me to a point that it's one of these things a lot of people don't really know about, um, is how useful they can be for young people.
Mm-hmm.
Um, I mean, like I said, I'm a newspaper reporter. I don't have a lot of money, but when my son was still, a teenager getting ready to go to college, we opened a really small, Roth IRA for him just to get it started, because, and I'm sure you know this, Mike, once you open a Roth IRA, it starts this 5-year clock ticking,
Mm-hmm.
where after 5 years, you can take money out of it to use as a down payment for a house.
Mm-hmm.
And it's one of those great little tax vehicles that I think flies under the radar. Everyone thinks about it as saving for retirement, but now, if my son wanted to try to buy a house someday, he could potentially take some money out of his Roth IRA without any taxes or penalties because it's been open long enough.
Mhm.
So it's just one of those little oddities of the tax code.
Yeah, that's right. I think Roth IRAs are one of the best vehicles for saving for retirement, especially. So yeah, great thing if you can do it. One thing, going back to the retirement deal, one thing you also have to keep in mind is that even though Social Security is not taxed at the state level, up to 85% of it is taxed at the federal level. So if Social Security were your only income, you're not going to pay any income taxes. Other income will affect the taxable amount of your Social Security. So if you have a big IRA and you're taking distributions, that will affect the taxable amount of your Social Security, at least on federal income taxes. But if you convert to a Roth IRA, and by the time you're drawn on Social Security, all you've got is Social Security and income from a Roth IRA, you could be in a real good position tax-wise.
Right, right. I mean, I always find that so much financial advice, it can all be correct and make sense, but then so much of it falls back to what people are comfortable with and how they sort of operate personally.
Right.
Like I've written a bunch of columns over the years about credit cards, and what my takeaway has always been that, for half the people who use credit cards, they're just poison, high interest cycle of debt. But for the other half of the people who pay their balances in full on time every month, it's a way to make money.
Yeah.
I mean, you're getting a little cash back, you're getting airline miles, you're getting big sign up incentives. And if you never pay them a dime of interest, that's money in your pocket. But I'm hesitant sometimes to suggest that to people, because if they're in the other group, it's they don't need to be signing up for new credit cards.
That applies to so many things. People often ask me, should I pay off my mortgage? Well, the financial answer to that is if you're paying 3% interest, there's a pretty good financial argument to not pay it off, right?
Right.
But there's another group of people where just emotionally, they plan to stay in their house and they just want to have that thing paid off. And so we don't want to discount the emotional factor in financial decisions as well.
Mike, we just got another question. You might know this off the top of your head. I don't without looking it up. The question was, what's the top income level that will allow you to open a Roth IRA?
Oh yeah, I should know this too. It depends if you're here. Let me look it up real quick because it changes every year. It depends if you're single. It's a great thing about doing a Zoom meeting. I can just Google something here.
Right. And I should say, since I think it's 12:28, we're scheduled to end at 12:30. We might roll over just a little bit. But while you're looking that up, I'm gonna throw out one of my little tips that I've mentioned a few times, and maybe everybody watching today can find some way to make use of this today. And I don't know, this is dating me because it's from an old Janis Joplin song, but there was a reference in one of her songs to the old TV game show Dialing for Dollars. But I call this Dialing for Dollars. It's basically, if you have streaming services, Sirius XM, or if you have a credit card that you're paying interest on that has high interest rates, or if you accidentally forget to pay your bill on time and you get a late fee, call them on their 800 number and ask, can you lower my interest rate? Will you waive that late fee? Can you give me a better deal? 9 times out of 10, the answer is yes. I can't tell you how much money I've saved by doing that. And these days you can do a lot of those things online. But I mean, trust me, if you've got, I wrote a whole column about Sirius XM. I mean, if you have that satellite radio service in your car, just go on their website and tell them you're going to cancel it, and they'll cut the bill by 2/3 or something. I mean, I mean,
you're right. That happens with a lot of stuff. You're absolutely right. With I've done that too. I mean, with our internet bill, we say, well, we're going to switch, and they say, well, we'll give you a promo for 2 years. Yeah, that's right.
Right. Yeah, it's just one of those. Oh,
I'm
go
sorry.
ahead.
No, I was just going to say, I dropped a link in there for the Roth limits. The limits on the link that I sent are for 2021, but you'll be able to find the 2022 limits on there. It's actually kind of a phase out deal where once you hit a certain level, it starts to phase out the amount you can contribute. But keep in mind, the amount that you can convert is not limited to your income. So regardless of the amount of income you earn, you can do Roth conversions.
Right, right. Yeah. And that's definitely getting into the, sort of higher level personal finance stuff. But you're absolutely right. I mean, if somebody rolls, a large-ish IRA into a Roth, they could end up paying a higher tax rate on that money than they would on their regular income if they do too much at once.
Don't forget to check out if your employer, if you work for an employer that has a 401k. A lot of times people don't realize their employer has a 401k Roth option, which that's a great deal if you can contribute much higher amount and there's no income limit. So if you're not eligible for a Roth because of your income, see if your employer offers a 401k Roth. I know if you work for the state, you do have that option.
Right, right. And of course, for younger people, I mean, it's so hard to feel like you have enough money to set aside for retirement when you're, maybe you're in your 20s and you're making $35,000 a year and trying to afford an apartment in like Charleston. It's got to be, I know a lot of people in those situations who have, second jobs on the weekends, driving cars but still, if you've got an employer that's offering a match on retirement savings, you got to find a way to do it because it's just free money. I mean, if you put in $1 and they'll throw 50 cents in on top of that, you need to find a way to take that match, right?
Your income is always going to rise to your expenses.
Yeah, fair.
So yes, you do need to find a way to do it. And most of the people who I know who have done a really great job successfully saving for retirement will tell you that they started with a small amount, $10, $20, just to establish a habit. So I agree. If you can do up to the match, you want to do it. Otherwise you're leaving money on the table, but start with something. Even if you don't think you can afford it, start small.
Mm-hmm.
Get in the
Exactly.
habit.
Exactly. Well, I think we've about run as long as we've told people we were going to. I think it's probably a good time to stop. But do you have anything else that you've just been dying to say, Mike, before we wrap this up?
Not necessarily. No. Check out my videos and see if I encourage you to do that, and just read David's column because he does give a lot of good advice.
Well, thanks. Yeah, and my column's in the Sunday paper every week and also online. And I know we put some of the links in the chat, and they're also going to go out in the follow-up email. And this whole presentation is going to be recorded and available to watch anytime. Mike, I sure appreciate you joining today. I know there was some prep time involved, and thank you. Thank you very much.
My pleasure, David. Good seeing you.
Yeah, and thanks for everybody who joined us today. Have a great rest of your day.